What's good, MGT kings and queens? Welcome back to the Bot Dome. I am Moon God, and today we need to talk about something that's driving me absolutely crazy right now. Everyone is screaming bullish. The Iran deal, oil crashing 6%, Bitcoin ETFs pulling in over $500 million in 3 days, crypto Twitter's doing backflips, and my bot sitting there like nothing happened. No signal, no trade, just watching. And I want to show you exactly why that is the most rational thing that this machine could possibly be doing right now. Because what the crowd is celebrating and what the smart money is actually doing are two very different things. Let's get into it. Now let's start with what moved markets this week, because the news is actually significant. The United States and Iran reportedly reached a 14-point memorandum of understanding. Now that deal would have Iran agree to a memorandum on nuclear enrichment. The US agrees to lift sanctions, and both sides open up transit through the Strait of Hormuz. And why does that matter for crypto? Because the Strait of Hormuz is one of the most critical oil choke points on the planet. About 20% of global oil supply passes through it. And when the strait is restricted, oil prices spike, inflation expectations rise, and risk assets, including crypto, they take a hit. So when that strait opens, oil crashes, inflation fears cool, and money flows back into risk. Oil dropped 6% overnight. Bitcoin pushed to a recent high of $83,215. Ethereum pushed back toward the 2,400 zone. Now on the surface, this looks like the start of something real, and I get it. You know, the headlines look incredible, but here's why my 60-year young brain kicks in and says, hold on, let me check what the professionals are actually doing before we start celebrating. See, Bitcoin spot ETFs just had 3 straight days of inflows totaling $1.16 billion. BlackRock and Fidelity, they led the charge with that. Total crypto ETF assets under management, they're now sitting near 123 billion. That's a massive number. Institutional capital is flowing in, and that's real. But here's where it gets interesting. Let me pull up the COT report. See leveraged funds. The directional smart money I talked about in the last video, that professional hedge funds making pure directional bets, they're sitting at 3,534 longs versus 13,894 shorts. That's a net short position of over 10,000 contracts. 10,000. Now let me ask you something. If the trade was that obvious, if the Iran deal was clearly the breakout catalyst everyone thinks it is, why are the most sophisticated directional traders in the futures market still sitting net short by 10,000 contracts? They are not retail traders. They're not people panic buying because they saw a tweet. They're quantitative funds and commodity trading advisors with analysis and risk models and billions under management. And they're positioned short, y'all. This is not something I ignore, okay? So then you add this, stablecoin reserves on exchanges dropped 5.18% recently, from 70.37 billion down to 66.37 billion. Now, stablecoins on exchanges represent dry powder, capital ready to deploy into the crypto. When that number drops, it means one of two things. Either people are deploying that capital into coins, or they're pulling it out of crypto entirely. Now, given that this drop happened alongside Bitcoin pushing toward that 83,000, the evidence suggests capital's leaving the ecosystem, not trading within it. So, that's not a healthy breakout. That's not what that looks like. Now, let me pull up the BTC CME weekly chart, and let's take a look at those two gaps that we were looking at yesterday. Right now, Bitcoin's trading around $80,365. That lower gap, we can see here with that low blue box, and then the upper gap, obviously, in that upper blue box. Now, neither one has been filled. And this matters more than the Iran deal narrative, and here's why. CME gaps form when Bitcoin future market closes on Friday and reopens on Sunday. And during that weekend window, spot price keeps moving. So the gap between Friday close and Sunday open becomes a price level that's historically acted as a magnet. The institutions know these levels, algorithms target these levels. And both gaps are sitting above us, right now, like unfinished business, right? The Iran deal gave us a push. Bitcoin hit 83,215 on the recent high, but we did not fill either gap. So prices, now sitting at 80,365, like I said, and pulling back. So here's the real question. Does the Iran narrative plus the ETF inflow momentum give Bitcoin enough fuel to push up and fill both those gaps? Or do we pull back first, flush the weak hands and then make the move? The COT data showing 10,000 net short contracts from professional traders, tells me that the smart money is not so convinced that this rally has enough juice to fill both those gaps cleanly. They're positioned for either a pullback or a failed breakout. And until leverage funds start covering those shorts, man, I'm treating every bounce with respect and every breakout with skepticism, right? Now, let me bring it back to what the machine is doing in the middle of all this noise. Now, look at here. I'm pulling up the Telegram regime status from the trading bot. AVAX is ranging at 0% trend confidence. ETH is ranging at 11% trend confidence. Both coins fully blocked, zero trades firing. And I want to be very clear about something. Yesterday, when I recorded that last video, ETH had briefly flipped to bull. It was on a bull trend at 100% confidence. By the time I looked at it again today after I saw the pullback, pulled up that Telegram, it confirmed the regime detector had already reassessed. ETH dropped back to 11% trend confidence in ranging versus 100% bullish. Now, the machine looked at the price structure after that Iran deal bounced and said, not enough. Not a real trend, ranging block active. That's not a bug. This is exactly what the system is designed to do. A day one spike on geopolitical news is not a confirmed trend. The regime detector requires sustained directional structure across multiple candles before it gives the green light. ETH at 11% did not meet the threshold. AVAX at 0% is not even close. So the bot is sitting on its hands while crypto Twitter celebrates. And here's the thing nobody wants to hear. This is the most sophisticated response the machine could give. Retail sells, retail sees the green candles and the buys. My algo sees green candles on ranging structure and goes back to sleep. So 7 years of blown accounts, watching retail do the opposite, taught me to build this bot this way. Now I want to touch on something that happened this week and almost nobody in the retail space is talking about. Consensus Miami 2026 is happening right now. For those who don't know, Consensus is one of the largest institutional crypto conferences in the world. Adam Black, the CEO of Blockstream, and one of Bitcoin's earliest contributors, said publicly at Consensus that sovereigns, pension funds, and treasury companies will join the next wave of Bitcoin adoption. Not retail traders, not crypto YouTubers, not meme coin flippers. Sovereigns, pension funds, treasuries. These are entities that manage hundreds of billions of dollars. And here's why that matters for my bot specifically. When sovereign wealth funds and pension funds start buying Bitcoin, they don't buy through crypto exchanges. They buy through regulated futures markets and ETFs. The COT report I showed you, this is the futures market. That's where early institutional positioning shows up before it shows up in price. So when I look at the COT report and see leveraged funds sitting net short while spot ETF inflows are surging, I see a market in transition. Retail and some institutions buying spot. Professional directional traders hedging or positioning for a pullback. And this is not a signal to buy blindly. This is a signal to wait for confirmation and let the machine do its job. Now let me pull up the dashboard so you can see exactly where we stand. Win rate, nothing's changed because we've been in this, this regime of range. So since we've been ranging for weeks, the machines and these numbers have been pretty much the same, but they're important to go over regardless, especially if you're someone new who's just tuning in. So win rate, we can see at 75%. 6 wins, 2 losses, 8 regime filtered trades, total P&L plus $1,037, starting from an account of 10,000. Average risk to reward, 2.1 R. Every dollar risk, the machine made $2.10 back on average. Max drawdown, 1%. AVAX win rate by the coin, we're looking at 80%. The ranging block is doing exactly what it's supposed to do. ETH win rate by coin, 66.7%. The bot is ranging now, both coins are blocked, both coins protected. Now, while everyone else is panic trading Iran headlines this week, the dashboard did move. Not because nothing happened, but because nothing happened at a zone with a score of 7 or higher, with a confirmed regime and a confirmed candle structure. All 4 gates have to be open. Right now, none of them are open. And that's perfectly fine. Hey, listen, so here's what I want to hear from you in the comments. Do you think this Bitcoin fills both the CME gaps before making a new high? Or does the Iran deal plus the ETF inflows give enough fuel to push straight through? You drop your answer below, man. I read every single one, and yes, I will argue with you if you are wrong, respectfully. Here's what I want you to take away from the video. Good news does not always equal a good trade. 1.16 billion in ETF inflows is real. The Iran deal is real. Oil crashing 6% is real. And COT data showing 10,000 net short contracts from professional traders is also real. 2 unfilled CME gaps sitting above us is also real. AVAX ranging at 0% is real, and ETH ranging at 11% is real. The machine assessed all of it and went back to sleep. My job is not to pick the narrative that feels best. My job is to weigh all of it, run it through the machine, and wait for the 4 gates to open at the same time. Right regime, right zone, right candle structure, right score. None of those are open right now, so we wait. Now, I built this at 60 years young, with 0 coding background in 5 days, 7 years of reading markets through bull cycles, bear cycles, panics, and parabolas taught me one thing. The best trade comes when everyone else already bought. And right now, everyone already bought. If you want the live alerts before I make videos about them, the link to MGT Kings and Queens is in the description. 30-day free trial. Come see what the machine is watching in real time. Smash that like button, hit subscribe, ring that bell so you don't miss Tuesday's video. MGT Kings and Queens, let's freaking grow.